Hello folks, it's Sunday, July 24. Let's jump into the economic news. I find this interesting. So Zimbabwe has announced that they are going to start issuing gold coins. Now they're not saying that they're starting a gold-backed currency. They're just going to make gold coins available through the country's banks. Citizens will be allowed to buy these coins as a way to protect themselves from inflation. A couple of interesting points here. It's a 1 ounce coin, and so that's $1,720 or $30 right now. How many citizens in Zimbabwe are able to save in increments of $1,700? And so that's one interesting thing about this. The country is still going to use the Zimbabwean dollar as their official currency, and they will continue to use foreign currencies, the US dollar and the euro, also as official currencies within the country. Now, the reason I find this interesting is because in my mind, when a trend, well, not just in my mind, this is a truism. When a trend reaches an extreme, there's only one thing that can happen, and that's for the trend to reverse and go in the other direction. And so here on planet Earth, we've been at the extreme zero gold-backed currency for decades. And so there's only one way that this trend can go from here, and that's that it reverses in the direction back towards gold-backed currencies. And so all we're waiting for is the first country to reintroduce a gold-backed currency. Now, I didn't think it would have been Zimbabwe. And again, they're not claiming that this is a gold-backed currency. They're just making gold coins available. I was expecting China or Russia or a combination of the two to issue a gold-backed currency. And actually, I think that's what they're going to be forced to do. Right now they're talking about their BRICS currency being a basket of currencies within the BRICS nations. I don't think that will succeed, but what the heck do I know? I think ultimately we're going to see Russia or China or both introduce a gold-backed currency, but we'll see what happens. So this is details from this article on the Zimbabwean gold coin. Let's see, Zimbabwean dollar is still the official currency. That dollar has lost 40%, over 40% of its value just since the beginning of the year. So we're halfway through the year and they've lost 40%. So imagine that in the course of 6 months, 7 months, the dollar that you're carrying around in your pocket has lost 40% of its purchasing power. That's scary. This is amusing. Zimbabwe is going to allow citizens to either take physical possession of the gold coins or leave them in the custody of the bank. It's like, what kind of Momo would leave in a country that's hyperinflating? Leaving your gold in the bank, probably not a smart thing to do. And especially with all the opt-in laws. I mean, all of the countries that I'm aware of have opt-in laws at this point. And of course, we saw them being exercised in Greece. They were formally put on the books in America back in the 2000 or in the aftermath of the 2008 financial crisis. And so here in America, our savings accounts and checking accounts are subject to being bailed in, meaning, not our money anymore, it's the bank's money. And maybe they'll let us have it, maybe they won't. Let's see, current inflation in Zimbabwe, 192%. That's exciting. Back in 2007, this is when the previous Zimbabwe dollar officially started to die, is that they acknowledged hyperinflation, had the world's first $100 trillion note. That was in 2009. And in 2009, they officially started using the US dollar and other foreign currencies as legal tender. In 2019, they reintroduced a Zimbabwean dollar, and of course it's just been devaluing ever since. Looks like their high point in inflation was back in 2020 at 557%. Wow, that's some inflation. So even with this gold coin, they're going to keep the US dollar and other foreign currencies as legal tender for another 5 years. So interesting thing to keep on the radar, this gold coin in Zimbabwe, see how it does. Russia and China and the other BRICS nations talking about a new reserve currency made up of a basket of currencies in the BRICS nations. So that's still just in the talking stage at this point. I was curious. I wanted to get some insight into what might this look like, this BRICS reserve currency. And so, of course, these are the original BRICS countries, and those countries have 3.2 billion people, 41% of the world's population. These three countries have been invited to join: Egypt, Saudi Arabia, and Turkey. These are the populations of those three countries. It's another 200 million people. So the potential for the BRICS reserve currency is about 3.4 billion people. It's not quite 45% of the world's population, but it's a bunch of darn people. I was next interested in, okay, what does inflation look like in these BRICS nations? And I was surprised to see that, with the exception of Turkey, it's actually not that bad. I don't know, you talk about, is 11% inflation that bad? 13% in Egypt. It's certainly not good, 14% in Russia. But it's not 80%. I was expecting to see much higher inflation throughout most of the BRICS nations. As far as a central bank wanting to hold any of these reserve currencies, and so, the BRICS nations come out with a new reserve currencies, all of the central banks in the coalition of countries will have to hold this new reserve currency. And so if you're talking about a country with 80% inflation, you don't really want to hold that country's currency as part of your reserves. But probably what a basket, if you were looking at the weighting for a basket of these currencies, you'd put the lowest weighting on the Turkish lira. You'd hold very little Turkish lira in your basket of currencies. Probably primarily the basket would consist of the Chinese yuan and the Russian ruble. So let's see what's next. Oh, ECB this week. So they did two things. So they raised their interest rates all the way to zero. Can you imagine having raised your rates all the way to zero, which of course takes them out of the negative interest rates, officially now at zero. And of course, they're fighting, or claiming that they're fighting 9% inflation in the Eurozone right now. Well, zero interest rates don't do anything to fight 9% inflation. I mean, it's ludicrous. The second thing the ECB did this week was to announce they're calling it the Transmission Protection Instrument. That's just a fancy name for bullshit. Just, we're going to run the printing press and we're going to buy government debt. What's different about this tool is that it's throughout the EU. So with this tool, the ECB is going to buy government debt throughout the Eurozone. And one of the things they're talking about is anti-fragmentation. They're trying to prevent the Eurozone from falling apart. Obviously, they feel there's a risk of that, or they wouldn't be talking about it. And so that's one of the elements of this TPI, Transmission Protection Instrument, which, like I said last week, central banks only have two tools. They got bullshit and they got a printing press. And so this TPI, this is just some fancy bullshit for we're going to run our printing press and buy up government debt. And this is funny. So this is Francois de Galhou, and I probably just horribly mangled his name. He's the governor of the Bank of France. I assume that he sits on the ECB in some capacity. And so he's out there telling the world that this TPI, this tool is so powerful that its mere existence will prevent us having to use it, you know. Which, you know, at least if you're going to tell tall tales, make them good ones. You know, don't go out, you're going to throw out some bullshit, don't make it weak, you know, come out with some good stuff. And this is some pretty good bullshit. This TPI tool is so powerful, we won't have to use it. And of course, that's a lie, because it was back here in mid-June when the ECB went in and they started buying government debt hand over fist. You know, that's why we see this chart looking like this. This is mid-June. That's when the ECB started buying Euro bonds, at least, and probably the government bonds in other countries as well. We see the same thing in the, oh, that's the Euro. We see the same thing in the 10-year note here in America. Mid-June, interest rates spiked to a new high and started dropping dramatically. Only way you can get a drop like this in an instrument as large as the 10-year note is with government bonding. Government buying. You know, mom and pop investors, institutional investors, they aren't buying enough 10-year notes to make it do that. That's government buying. Same thing in the ECB, in the Eurozone. This is the Euro, so I wanted to see, you know, what did the Euro do in reaction to the ECB announcements and the change in interest rates this week. And so we can see it here. A little bit of bottom based on that long tail on that candle, and then a bounce in the past week. So we did get a little bit of a bounce in the Euro. Of course, it was at a point, it was at a potential support level, the lower median line of this Andrews fork. So anyway, the Euro did react a little bit to the ECB actions this week. And just to keep in mind, this, in my opinion, this is an important chart for us to keep in mind. Interest rates globally have been on a downtrend for 40 years. That's a long trend. 40 years is a long trend. Central banks have been driving interest rates ever lower. They reached essentially zero. And of course, in some countries, they actually went into negative interest rates. That all changed in spring of this year. This is a breakout from a 40-year downtrend. And of course, that's why we have central banks reacting now, or back in mid-June actually. They are reacting to this breakout from a 40-year downtrend. They're scared. Their game is ending. The game is up. Interest rates want to rise, and the central banks are trying to prevent that, because rising interest rates, that's the end of everything. So anyway, this is an important chart for us to keep in mind. The last time we had a sustained uptrend in interest rates, it lasted for 18 years. And so imagine if interest rates are starting a new sustained uptrend, it's all over. It's just not a good thing. Not that the games they're playing are a good thing either. I mean, it's kind of a damned if you do, damned if you don't situation, but let's keep moving. So China banking crisis, just a little bit of a timeline. So back in December of 2021, Evergrande defaulted on $300 billion in debt. Evergrande, largest real estate developer in the world. Some analysts at the time said that this was the first domino to fall in the global debt markets, that basically Evergrande defaulting would take down the rest of the world's debt markets. And isn't it interesting that here in June, July, we've got both the ECB and the U.S. Fed buying government bonds hand over fist because they're trying to prevent a collapse of the bond markets. And so maybe Evergrande was the first domino to fall. So anyway, something for us to keep an eye on. July 2022, that's this month, citizens stopped paying mortgages, Chinese citizens stopped paying mortgages on unfinished condo projects. And that's a kind of an interesting point. In China, the people buy the condos before they're finished. And so basically they're putting their money down, making a commitment to unfinished condos. Let's see, Chinese real estate's believed to be the largest single asset class in the world. This one amuses me. So Chinese investors, and notice the air quotes around investors, they don't rent out their investment condos. They leave them vacant. And of course, that's all well and good as long as prices are going up. You can rationalize that it makes sense to leave an investment condo sitting vacant. When prices start to drop, well, a vacant condo isn't much better than Beanie Babies. You know, what do you do with a vacant condo? And when you got 65 million vacant condos, are there enough Chinese citizens to rent all of those vacant condos at a market rent? Well, you know, I don't know. Don't know the answer to that one. But anyway, that's an interesting aspect of the Chinese real estate market. April of 22, the articles that I've seen consistently talk about rural Chinese banks and actually name 4 provinces. I think there are 14 provinces in China. That these rural Chinese banks started freezing the deposits of savings accounts. 400,000 people affected, which, you know, in a country with 1.3 billion, 1.4 billion people, that's not a lot of people on a percentage basis. It's a lot of people, but not on a percentage basis. And it's funny, these banks that froze accounts, they were offering high interest rates of 4%. So imagine 4% interest being high. Of course, savings account here in America, you're lucky if you can get 0.5%. One of the aspects of this situation, these banks that froze accounts, they were offering savings accounts through online outlets. In China, evidently, the citizens are only allowed to use banks within their home province. And so they can't put their money in banks in another province. And the bailout plans, so the Chinese government is coming in and saying, okay, we're gonna bail out these frozen savings accounts, but they're potentially not going to bail out any accounts that violated the rules. So if your savings account was in a province other than your home province, well, that doesn't qualify for a bailout. So anyway, there appears to be some weaseling on the part of the bailouts. And of course, there's a very low limit on the bailout amount. I think it's like $7,400. Let's see, at least one of the banks, this Henan Bank, officially declared that the savings were now investment products. So how'd you like, your bank, Wells Fargo, to come out and say, well, you had a checking account, but we converted it into an investment product. And don't you feel glad that you've got this Wells Fargo investment product? Of course, you can't withdraw it or sell it or do anything with it, but you're a happy investor in the bank now. And so anyway, from what I've seen so far, it was only this one bank that officially converted savings accounts into investment products. So anyway, China has banking problems. That's a situation to watch. There's a number of stories circulating claiming that China has deployed tanks to defend banks, and I personally don't buy that. I've seen articles claiming that that's not what's going on at all. Basically, this footage that's being circulated is from years ago. And you think about it, you know, tactically, tank is not a very effective weapon for protecting a building against the citizens. You know, that just, what are you going to do with a tank? You can run them over. You can, you know, you can start shooting at them with on American tank, it'd be an M60 or a 50 cal. But, you know, those are pretty nasty weapons to use against citizens who are only trying to get their money back out of the banks. And so anyway, I don't really believe that the Chinese are deploying banks. But this article does talk about the Henan Bank declaring that savings accounts are now investment products. Let's see what's next. Here in America, so obviously we're Americans, what's our situation? Well, you know, a lot of people would tell, if you started suggesting that, you know, maybe you ought to be concerned about your money in your bank here in America, they might tell you, oh, well, my money is protected by the FDIC. You'd say, well, Fred, are you aware that the FDIC has about 3 cents in backing for every dollar that you have in your savings account? So yeah, your money is guaranteed by the FDIC. What is that guarantee worth? As I said a minute ago, the bail-in laws here in America, they were put on the books back in 2008, haven't been enacted yet. As far as I know, Greece is the only place where an official bail-in has occurred. Part of the bail-ins in Greece was a daily limit, and I think there was a monthly limit as well on withdrawals. And so, you know, even if our bank accounts were not completely frozen, we might have a limit imposed on us where you can only get, for example, $300 a day out of the ATM. So yeah, you got $100,000 in the bank. What good does it do you? You can only access it $300 at a time per day, and potentially a couple of $1,000s a month. And so, yeah, the next argument might be, well, okay, the FDIC's only got 3 cents on the dollar. They'll get bailed out. And yes, they will get bailed out. But what are they going to get bailed out with? Printing press money. U.S. Federal Reserve is going to go run up a couple of $1 trillion Benjamins off the printing press and bail out the FDIC, which just results in more inflation, and it just makes the problem worse. We are at the point, folks, where everything the central banks do just makes the problem worse. In my opinion, we are at the end of fiat currencies. It's going to be ugly. It's going to be messy. We don't know exactly what it's going to look like, but again, in my opinion, we are at the end of the trend of fiat currencies. The next step is back towards gold-backed currencies, or at least commodity-backed currencies. So what are some alternatives? And I can only tell you what I'm doing myself. So I am moving my money from large banks, or a large bank, into several credit unions. So the amount of money that I keep in the bank, which is not a lot, most of my savings are in physical silver and gold. I am moving my money out of the large bank that I usually use into several credit unions. Credit unions are backed or guaranteed by NCUA, which it's just another government insurance plan. I don't know if they have any more backing than the FDIC does. And again, it's just another government insurance plan. Having more than one bank account potentially means that if we do end up in a situation where we're limited on a daily or monthly basis, if you have more than one bank, that may mean that instead of $300 a day, you can get $600 a day. So that's one of the strategies that I'm employing currently. I'm using multiple banks for the money that I keep in the bank. Physical checks. I am getting physical checkbooks for all of my both checking accounts and savings accounts. My rationale for doing that is I want to be able to demonstrate good faith. And so if the banks do end up being frozen, I want to be able to write a check, give it to whoever it is. You know, I don't have car payment, but, you know, car payment, mortgage payment, rent payment, whatever payment I need to make, I want to be able to show good faith, write a physical check, give it to the payee, and tell them, you know, look, here it is. I'm trying to pay you. I'm sorry that the banks have locked up my money, but in good faith, I am making an attempt to pay you. If all you have is a online bank with no physical checks, you may not be able to do that. And, you know, I don't know that demonstrating good check with or good faith with a physical check will make any difference. It may not, but it may. And again, I'm just I'm just strategizing. It's like, what can we do in the current situation? Let's see. That's all I've got on financial news. Let's jump into the charts. So this is in the top frame. We have gold versus the US dollar in the monthly time frame. Encouraging signs. The gold has been in this sideways trend for however many months that is. Basically, the last that's probably year and a half, year and a half. Currently bouncing off of this horizontal support level. When we look at the same thing, this is gold versus the US dollar deflated by 2 times the inflation rate, CPI. We see that gold is now bouncing off of this horizontal support level, which is also the bottom of the big scary plunge, March of 2020, and also the bottom of this downsloping channel. So a couple of reasons to be encouraged about the current state of gold potentially having found a bottom, at least temporarily, and being on an uptrend. We've got a bounce occurring in this chart, and we also have a bounce occurring in the deflated chart after having reached 2 potential support levels. And so anyway, I'm encouraged by this action in gold. Another thing I wanted to show in gold with the deflated chart, when we look at the long-term picture, so this is going back 1973. Well, there was the big rally. Gold spiked up to $850 or so. There it is in the non-deflated chart. Here it is in the deflated chart. Notice that we made a new all-time high at the peak of the last bull market, 2011. We made a new all-time high, and then another all-time high back in 2020. But look at the deflated chart. This was not an all-time high, and then this was an even lower high. And so this was eye-opening to me. This is the effect that inflation has on our money over the long term. Every day that goes by, we are losing purchasing power because the central banks and governments keep running the printing press. They are stealing the value of our money. They do it day in and day out. And this is what it looks like in the long term. They are robbing us of the fruit of our labor. Sigh, I'm on a roll this morning. So here's gold in the weekly time frame. Again, bouncing off a potential support level. A lot of overhead resistance. MACD in bear mode, which suggests that the primary trend is still down. MACD histogram hinting at, again, potentially gold turning up from here. Stochastics, energy rising slightly. In the daily time frame, again, we're seeing a bounce. Gold on Friday jumped above its 20-day moving average, pushed all the way up into resistance at the lower median line of the shift pitchfork before pulling back. Looks like MACD wants to give us a new buy signal, still in bear mode, but potentially about to give us a new buy signal. Energy rising from a very low level. Silver in the deflated chart has not reached the same support level that gold has reached, and so not as encouraging picture in silver as in gold. Same thing in the long-term deflated chart. This was the $50 an ounce back in January of 1980. This was $50 an ounce in April of 2011, but when we deflate it by the CPI, actually 2 times the CPI, nowhere near the same amount of purchasing power at this point, and then at this, even lower, even lower high, and so again, we're continually losing purchasing power in our money. This is silver in the weekly time frame, perhaps trying to bottom at this point based on the lower wicks in these candles, trying to turn back up. We've got a horizontal support resistance level. It'd be nice to see silver in this coming week head higher off of this level. MACD's in bear mode. No hint from the histogram that MACD wants to turn higher. Energy still very low. Silver in the daily time frame, bouncing off the median line of this Andrews pitchfork in a sideways range. Lower wicks on these candles, suggesting that potential bottoming. Still having resistance on the 20-day moving average. MACD hinting at a new buy signal. So again, silver not as encouraging as gold. This is GDXJ, the mining stocks. This is encouraging action. We've pushed up through the 20-day moving average and through the median line of this shift pitchfork. On Friday, had a nice move higher and then a pullback. So, ended up not being as exciting as it could have been, but still encouraging that we've moved above 2 levels of resistance. New buy signal in MACD, still in bear mode though. Energy mid-level. So some encouraging signs from the mining stocks. My strategy in the mining stocks, if we get a uptrend, sustained uptrend, I will be substantially lightening my positions in mining stocks. Bitcoin, a little bit of positive action, pushed up through a horizontal resistance level. Currently, the upper median line of this modified shift pitchfork is acting as resistance, which is, of course, just below the 50-day moving average. So we've got Bitcoin squeezed between support at the 20-day moving average and this horizontal support level, and then resistance overhead. MACD on a buy signal, but, you know, still in bear mode, and histogram is saying that MACD is not moving higher. It's sideways to down. Let's see the U.S. dollar daily time frame. We've got some bottoming action, lower wicks on these candlesticks, support along the 20-day moving average. We lost support at the median line of this modified shift pitchfork. That level is now acting as resistance overhead. MACD on a sell signal, but still in bull mode, energy about mid-level and declining. I'm not convinced that the dollar is done with its uptrend. We'll see. I mean, you know, that's as with any with any financial market. We'll have to see what happens next. This is the 10-year note in the daily time frame. Look at this huge gap, folks. Again, the only way this kind of movement happens in an instrument like the 10-year note is central bank buying. This was Friday. Obviously, the U.S. Fed and the other agencies that I mentioned, the Exchange Stabilization Fund, the U.S. Fed's open their trading desk, open market operations. That's not the right term for it, but anyway, multiple agencies that take action in our financial markets. Clearly, they're making this happen. This is not mom and pop investor that makes this kind of move happen in the 10-year note. The bond markets are larger by orders of magnitude than the stock markets. I mean, hugely larger. If that's kind of a silly thing to say, hugely larger. But anyway, bond markets are far larger than the equity markets. We don't get this kind of price action in the bond markets without central bank buying. We're down to the last three charts. Equity markets, this S&P 500, my opinion, counter trend rally, pushed through resistance at the 50-day moving average and then kind of stalled out on Thursday and Friday. MACD still in bear mode. Energy is elevated. So I would guess that with the ongoing action in the bond markets, interest rates continuing to decline, that money will come back into the stock markets. The institutional investors will basically be forced to put their money back at risk into the stock markets. And so possibly we'll see this counter trend rally in the stock markets continue. Similar picture in the Dow, pushing up into overhead resistance, but again, has made it through resistance at the 50-day moving average. MACD pushing up into bull mode. Energy elevated. NASDAQ, same thing, up above the 50, stalled out on Thursday and Friday. MACD almost up into bull mode. Energy elevated. Folks, I am out of energy. That's the last of the charts. Again, I hope I've provided some value this week. Man, it's amazing. All the stuff that's going on in the financial markets right now. Protect your money, whatever that looks like for you. You know, spread your money out amongst multiple banks. Get physical checkbooks so you can demonstrate good faith. If you haven't done it already, move some of your money into physical silver and gold. And I look forward to talking to you soon.